Hey San Diego, welcome back to the Apartment Geek Weekly, your most valuable show that you tune into. Hopefully, one of the most valuable or helpful. This week, I'm excited. It's kind of a short one. We're talking. There's a lot of we're at tax time right now, so I thought, okay, taxes is going to be relevant. What are the benefits? I should say tax benefits to owning real estate, apartment buildings, income property. So that's what we're going to talk about today. There's five main reasons. There's one that's a half reason, but it's still significant enough to where I'm putting it on there. So why does buying real estate, owning these apartment buildings, how does it benefit us, benefit our tax situation holistically? Whether you're a doctor, attorney, a scientist, a real estate broker, entrepreneur, you sell a car, it doesn't matter. The big one is depreciation. So for apartments, it's 27 and a half years. The the county assesses properties on land value and the improvements, the value of the structure and the property. And the government comes and says, you know what? Oh, the property is only getting older. It's depreciating in value. The actual improvements. So over 27 and a half years, you can take that value that's on the assessed county records, and you can divide that by 27 and a half and take that as an expense on your tax return. That is huge. It's free money. It's one of the main tax benefits that you get from owning apartment buildings. Depreciation. There's other product types or different years, so check your CPA if you own retail, strip centers, or office buildings, or industrial. But that's a huge one. And you see people that gets people down to a break-even point sometimes on their apartment complex where they're showing no income, even though there's been positive cash flow that's gone into their pocket. It's amazing. The second one has to do with depreciation. It's called cost segregation or accelerated depreciation, another way to term that. And that's where you hire somebody to analyze a property, one of your apartment buildings or any property really, any income property, and they pull out all the fixed value, how do I say it? The parts of the property like the windows, the plumbing, electrical. I'm not exactly sure what goes on there, but they pull out and they itemize all the aspects of the real estate, and they put a value to that, and then they can accelerate the depreciation from 27 and a half years to a much shorter time period. So what that does is it gets people to take huge losses on their tax returns, and we'll get into this as the number three reason. But if you're a professional real estate person or an active operator, and you can justify that to your CPA and the IRS, then you can take a loss from an apartment building and you can roll that or funnel that over to your personal tax return, which is huge. If you're making real good money, but you own buildings that take losses and your CPA is okay with that, you have to talk with him or her on that, then that's going to roll over and it's going to benefit you holistically on your taxes, because your big income job is now going to be reduced from the loss on the apartment building. So accelerated depreciation, cost segregation, you have to pay somebody to do it. I've been quoted 5 to 15 grand for an apartment building, and I've been told it's really kind of benefited, even though I've kind of slacked on following through with that. It's almost been like daunting or it's too much work or whatever, but I can see that as taxes become more of an issue with me, they're not as much now, that this is something that will really benefit me moving forward. Also, if you fully depreciate a property, you can sell that building, you can go into a new property via 1031 exchange and now have a completely fresh depreciation schedule to take advantage of. That's one of the primary reasons why people should consider doing 1031 exchanges more frequently if they're having to pay a ton of taxes, which a lot of people do if they've owned these buildings for 20, 30 years. So look into that or call me if you want to model that out. I never sell things on people or push people, but I can easily kind of model stuff for you. This is the kind of half one, but it's big enough to where it's in here. It's writing off the interest on the mortgage. The way you look at debt is so advantageous. Getting leverage from these banks and using their money to purchase real estate is so special and so advantageous for us that I don't even know where to start. I've done so many videos on it. The fact that now you can take the interest that you're paying the bank, 3.5%, 4%, whatever. Rates now are in the mid threes. So you take that, now that's an expense on your tax return. So you're benefiting from all the other aspects of the leverage, using other people's money, hedge against inflation. You're buying a much bigger asset with a smaller amount of money from your pocket, and you're controlling more real estate with less money, however you want to look at it. Now you can take the interest as an expense. It's a benefit. It's not as big as these other ones as far as 1 through 5, but it's still big enough to mention. And then finally, number 5 is being in real estate allows us to creatively take advantage of refinancing. This is the big one. And one of the models that is proven to work the best for real estate investors throughout the whole country is buy an asset, add value to it, and then at some point in time, 1 year, 2 years, etc., refinance and pull equity out. Well, the equity that you're pulling out is basically from the new loan on the property. So you're basically, the bank is giving you cash out. That cash goes in your pocket, tax free. So there was a financial planner that called me trying to kind of pitch me on a pension plan thing. Oh, Chris, you make so much money on paper, and this will be really good. And I kind of, and then he started talking to a lot of his clients who are making $1 million bucks a year or more, and whatever it is, and that's what they have to claim on their tax return. And they have to get really creative. And I said, the cool thing about real estate and owning properties, buying and selling and refinancing, etc., is that you can take advantage of refinancing properties and putting some of that equity back in your pocket, which you can enjoy, but it's not taxable income that you're making from a job or a career. Nothing bad about that, but real estate is really, really neat if you can get into it and you're into it enough where there's a level of creativity and you can take advantage of certain situations where you can make equity and then you can pull it back out. So refinancing, that's a huge, huge benefit from the perspective of taxes. So 1 through 5, those are the main things. Real estate does so much for us as far as wealth creation and cash flow. And we have clients now that have owned buildings for 20, 30, 40 years that have too much cash flow. And they're going into property, into areas where they're purposely getting very expensive properties like at the beach, so that they intentionally show a loss on those properties. That loss then counteracts the big profits that they have from these buildings that they've owned that are just cash cows. So it's a really fun game, and you can kind of keep going with it, kind of like this Monopoly thing. So let me know what you think. Send this to anybody that you think may benefit. I've been meeting a lot of people and talking to a lot of people where their kids watch the videos, and people seem to be getting some really good nuggets from them. I'm still working on my book, and this is going to be so cool for young people, and I'm really excited to get this out there at some point. It's been very difficult and slower than I ever imagined to do this, but kind of a cool personal challenge to take on. And then next week we're talking about kind of getting in the psychology of real estate, the expectations of owning apartment buildings versus the reality. And I think it'll be a fun discussion because we're going to look at both sides. People expect it to be bad, or they expect it to be really good. And we'll kind of go into the reality of what we see and how we kind of see people's experiences in general. So that'll be a fun one next week. So thanks for tuning in. Let me know questions or comments or anything like that. I'm always open to what people have to say or comment on it. So all the best, and see you soon.